guys, welcome back to my channel. It's Gigi. So in the previous videos I talked about the difference between index fund and ETF, and also how you prioritize your investment in your taxable account or in your tax advantage account. So today I'm going to talk about the 3-fund portfolio, what is recommended to put in, and what is a 3-fund portfolio, and how you establish the 3-fund portfolio in your different accounts. So if you're new to my channel, please subscribe. I talk about personal finance, investing, and retirement, different topics that related to your life. So don't forget to subscribe, like, and share. 3-fund portfolio.
3-fund portfolio actually uses 3 basic asset classes. So usually a domestic stock total market index fund, an international stock total market index fund, and a bond total market index fund. It is often used and recommended by the Bogle heads, which follow John Bogle's principle and ideas of index fund, and it's the terms they call the majestic of simplicity. So if you're the one who wants to get control and also have the tax efficiency, people are often use this 3-fund portfolio. It's very similar to the target date fund in your 401k, but then you just have more flexibility and control of. So in the following content, I'm going to talk about how you should establish your 3-fund portfolio and what's the benefit about it. Step 1, choose your allocation. So each asset you need to put a specific percentage of the allocation, and you can rebalance it throughout the year and change it up according to your age. So how you should put the percentage of stock fund or international stock fund or the bond, there's a rule of thumb about age in bonds. It's that 100 minus your age would be the percentage of your stocks. So it's very often saying that the younger you are, the more stock percentage should be in your 3-fund portfolio. And in current market, the bonds are pretty unattractive because of the low interest rate. So it is always up to you and depends on how comfortable you are and what's your risk tolerance to the stock market. Then you should allocate your 3-fund according, let's say in my age, late 20s. So I would more emphasize on the stock market and less bond, and there's different allocation you can follow and very similar to a target date fund, but it's very flexible. You can choose the percentage you want. And step 2, asset location, where you should put your total stock market index fund and where you should put your bond market index fund. So in my previous video, I talked about the difference between tax advantage account and taxable account. So very often your portfolio might have split to different locations. So for example, the total stock market index fund should be in your taxable account because it is low growth and very tax efficient. But for the total bond market index fund, you might want to put in your tax advantage account, which is your IRA account, because it has a higher tax if you're trading within your taxable account. So you should follow the tax efficient fund placement I shared with you guys before. Step 3 is to choose your 3 funds, which total stock market index fund you are looking at, and I actually talked about the difference between index fund and ETF. For example, if you are using Vanguard, there's a total stock market index fund VTSAX and a total international stock index fund VTIAX, Vanguard Total Bond Market Fund VBTLX. But if you are in Fidelity, there's a FZROX for the Total Stock Market Index Fund and FZILX for the International Total Stock Market Index Fund. So if you're in different institutions, you can find the equivalent investment and build your own portfolio. So why do we use the 3-fund portfolio? What's the advantage about it? Number 1, it's the diversification. When you look at the Total Stock Market Index Fund, you see what they're investing is actually the whole market. And there's over 10,000 worldwide securities inside the Total Stock Market Index Fund. And it contains every style and every cap size, large, small, mid-cap company. And next will be very low cost to zero cost if you're trading within Fidelity. And there's no manager risk, you manage yourself, and all the index funds are passively managed with low cost, and you can easily rebalance your portfolio because you get the control of it. So if you're interested about 3-fund portfolio and more about financially independence and retirement early, you can read about the book that's wrote by the Bogle heads. It's called The Bogle Heads Guide to Investing.
So that's it for today's video. Hope you guys enjoy it. Please like, subscribe, and share. If you are interested in more related topics, I'll be posting videos every week. So stay tuned. I'll see you guys next week. Bye.